So my name is Peter Owaga, the Managing Director of Truvalu Kenya office, and Truvalu is an investment company that is based in the Netherlands but then has offices across the globe. So we have offices in Colombia, in Kenya, in Uganda, in Bangladesh and in Nepal. We are a co-entrepreneur in the various SMEs that we invest in. So we not only offer finance, we also offer business development support services. Then we offer coaching, mentoring, strategic advice, as well as access to export markets. And we do this because we realized that it's not enough to just offer funding to SMEs. We have to go beyond the ordinary. And so what we do offer on top of that then helps the business to scale up and be more sustainable and successful in the long run. So whenever we evaluate an investment opportunity, the key thing that we look at is the product market fit. Because you might have a great product, but if there's no market for it, then you won't be able to scale up. Then there might be a market, but the product that you are having is not the most suitable for that particular market. So the key thing that we look at is the product market fit. Then secondly, we look at whether the business in and of itself is scalable and is it able to sustain its growth, because you do not want to be in a business that would hit a brick wall or would hit a ceiling insofar as its growth is concerned. You want to be able to see a business grow beyond 1, beyond 100, beyond 200. So that's what we typically look at, and that's what most investors look at. And so we've traditionally had the 3 P's, which is people, process, product, right? And so once you have those 3, then you become attractive to an investor. But then it goes also beyond that. You have to have scale, you have to have sustainable growth, and you also have to have more and more of an impact in the community that you're serving, because this is something that is becoming more and more prevalent even amongst traditionally commercial investors. How an entrepreneur can build a relationship before pitching to an investor is by first understanding the nature of the investor, because you do not want to have a mismatch between your product and what the investor is looking for. And then during the pitching process, you want to tell a story, because an investor is buying into a story. An investor does not necessarily buy into a business just like that. It's you as the entrepreneur and what your story is. So during that pitching process, and I'm sure most of us have watched the likes of Shark Tank and Dragon's Den, and the thing that usually stands out is what is the story behind the entrepreneur, what is the story behind the business. So that's precisely what you need to zero in on when you're during the pitching process. And now post the pitch, how you want to build your relationship with your investor is to give them as much information as possible, because an investor's decision making is only as good as the information they have at hand. We always refer to the business as the entrepreneur's baby, and this more often than not is the case. And so you can imagine this is something that you as an entrepreneur have poured your sweat, blood and tears into for a couple of years. And here comes this investor who assumes that they know everything, and so they ask you to change your business plan or strategy. Now, one way to handle that is to always look at it as a partnership, because so long as the investor is invested in your business, then they want your business to succeed as well. There is no investor who will make you change a business plan or strategy to the detriment of your business. An investor, first and foremost, is there to get a return on their investment. And then secondly, it's upon you as the entrepreneur to make the judgment call, because you are more knowledgeable about your business than the investor is. Why identify this investor? How do I get to know which investor is best suited for what I'm trying to do? Now, the good thing about most investors is that they do have a website. And in fact, we also have a very good organization which helps you to have a list of potential investors. And this is the East African Venture Capital Association. This has a list of almost all private equity and venture capital and angel investors in East Africa. So then you're able to go through the list and filter out and determine which investor suits yourself. And that's how then you also manage your investor expectations, because again, depending on the investor, they have various different expectations. You might find an investor who's more commercially minded. You might find an investor who's looking to give you debt rather than equity, or an investor who's trying to give you something in between, which we always refer to as mezzanine. And so once you are able to do a lot more research into an investor, then you'll be able to determine and find a way to skew your presentation towards that investor. Now, this does not necessarily mean that you go trying to create your business model to suit the investor. No, it's about you determining whether your current business model is most appropriate for that investor. And that's how I would say you would go about trying to, one, build on that relationship with your investor, and then two, identifying that particular investor, because not all investors are right for your business. It's upon you as the business owner to determine which investor is right for your business. Just the same way an investor is also evaluating whether you are the best investment for their fund, then you also need to almost filter out what investor is appropriate for your own business.